Hey, what's going on, everybody? Mike here, and welcome back to part 2, as I'll be sharing my favorite investments of all time. If you haven't seen part 1, go ahead, go back and check it out before watching this one so you don't miss anything. I'll leave links in the description and comment section of this video so you can check it out. As always, guys, if you want to support my work, I really appreciate it if you would make sure you're subscribed to the channel, like the video, comment on this video, and of course you can share this video. And remember, this is not investment advice, but I'm just sharing with you many of my favorite investments and some of my most successful investments. This next investment I'm going to share with you is the Vanguard Extended Duration Treasury ETF. Ticker symbol is EDV. Now, many of you out there, you're thinking, oh, not a bond fund. Bond funds are boring, Mike. They're so boring. Well, once you see the performance of this investment, I think you might just change your mind. This performance of this bond fund is very attractive. It's a sexy bond fund, guys. Yes, I know I just said sexy and bond fund in the same sentence, but I'm saying it, I'm putting it out here, and I'm about to show you why. You want income in your portfolio? You want a hedge against the downside of the markets? Look no further than Vanguard's ticker symbol EDV. It is Vanguard Extended Duration Treasury ETF is what we're talking about here. When you think long term as an investor, you usually think of a greater than a year, but this fund goes far beyond that. The bonds it holds, and it holds 80 different bonds, 80 different debt instruments, and these debt instruments it holds have effective maturity dates of about 20 to 30 years. So the debt's essentially being repaid on these debts over a 20 to 30 year period. This is all US government debt. It's 100% Treasury debt. And who's paying for it? If I were to guess, you and I, the taxpayer, is what I would guess if you were to ask me. Therefore, in terms of the safety or the likelihood of this debt getting repaid, in my opinion, it's very likely. It's much more secure than many other type of bonds or bond funds you can invest in. I know you guys can't get enough about talking about debt maturities, but you guys gotta control yourself. Just keep your cool, because we're gonna talk about something better now. Let's talk about income, because income is one of the key reasons people invest in bonds in the first place, right? Fixed income, income for life. That's what we're looking for here. And you're gonna get paid with this bond fund 4 times a year. Now, right now, you're gonna get paid per share of this ETF about 79 to 83 cents per share. And that's 4 times a year. So you're gonna get paid in April, July, September, and December. That's currently their payout dates when they issue their dividends. And the yield is not a lot, it's not huge, but you're gonna get about a 1.5% yield, which is still like 3 times the amount you would get in a savings account, 3 or 4 times. So all in all, it's not bad. If the yield's not enough for you, wait till you see the performance, and let's talk about that next. This is where I think this bond fund really shines, in my opinion, much more so than the yield itself. Year-to-date return for 2020 is 34% year-to-date. Not many investments have that level of return, and we're talking about a bond fund. We're not talking about a tech stock. This is a bond fund. So compared to the S&P 500 this year, this is outperforming. And even over a 1-year period, as you can see, this is still outperforming the S&P 500. 2-year period, it's been outperforming the S&P 500. And it's not until we run the charts back 5 years do we see that the S&P 500 overtakes it. So 5 years ago, the S&P 500 was doing very good, very strong. And so naturally, over a longer period of time, when the markets are moving up, this would lag. But when markets are volatile, when markets are uncertain, or when the markets are falling, this bond fund is a nice, beautiful hedge. It's like a pillow cushion that your money can lay its head on while the markets burn to the ground. And your money takes the elevator ride up in value as long as you have money invested in this bond fund. And that's the way it operates the majority of the time. So EDV, check it out. It's the sexiest bond fund I'll probably ever own. And so a good time to buy this is when the markets are actually moving up, because usually when the markets are moving up and are doing well, that's typically when this will start to come down a little bit in price, when you can get it at a discount. When the markets are falling, when the S&P 500 is dropping like a rock, that's when this fund gets more expensive. So try to buy this, or basically dollar cost average in when the markets are doing well, and you should be able to find some discounts, hopefully. Not always, but that's when you can usually find discounts on these kind of bond funds. As we're rolling into the next investment, how many of you out there have watched the movie The Big Short, which covers many of the different events that transpired during the 2008 financial crisis? Do yourself a favor, check that movie out. In The Big Short, there is a character who is played by Christian Bale, and he's playing the role of Michael Burry. I think I'm saying the guy's name right. I'm not sure. But basically, this guy is a very successful hedge fund manager during the financial 8 crisis. And he predicts that the whole real estate market's going to collapse. If you watch the movie all the way through, this is kind of a spoiler alert, at the very end, in the credits of the movie, you gotta wait till the credits, he mentions what he thinks the next great investment is gonna be in the future. And what he sees is water. Water, ladies and gentlemen, which is why the next investment I'm gonna be talking about is my favorite water utility company, American Water Works. Now, I'm not going to go into crazy amounts of detail on this one because I've already made a separate video regarding this company because I've been investing in it for such a long time. But currently, American Water Works sits around $140 a share. You can expect a $2.20 dividend per share that you purchase, which is about a 1.5% yield. Now, that yield, when you first hear it, it might seem low, but they are growing their dividend at a rate of 10% every year, and they've been growing at that rate for the last 10 years. So every year, the dividend you're getting on your set of shares is growing by 10%, which is not bad, which is well above averages of what other companies grow their dividend by. This particular investment is definitely one of my most successful in my portfolio, and I've held this investment. I think I've been investing in this company since 2014. Every single year, I add more shares, either once or twice per year. I keep accumulating more shares of this company because there's very few utility companies that can perform at these levels in terms of price appreciation, which we're going to get to in just a second. But in terms of payment, dividend payment, what you can expect to receive is a 55-cent dividend 4 times a year. So that's the dividend pays in February, May, August, and November. Quick side note, the dates of the dividends you're seeing on this Yahoo website, that is actually the day that corresponds to the time of when the company declares they're going to issue a dividend. For example, if they declare a dividend in August, the payment of the actual dividend actually hits your account the following month in September, usually around the 1st or 2nd. So the date listed on Yahoo is not always the same date as the time at which the payment of that dividend hits your account. Something to be aware of. Another factor about their dividend that I really like, and I think you guys are going to like, is that their payout ratio is right around the 50% marker, which is good. It means that they are not overextending the amount of their dividend payment or their earnings to their shareholders. So they still have excess capital to use it to grow the business, to pay debt, to expand the company, whatever they want to do. So I think in terms of stability, I think the dividend here is pretty darn stable, in my opinion. If we take a look at the financials, what I think you're going to notice as an investor is you're going to see that top line revenue, it continues to grow. And that is true as well with the bottom line. The net income, the way they're managing this company, I think is quite well. So revenue-wise, I think they're doing nicely. They continue to beat estimates most of the time. I think they have a bright future. With utility companies, there are some downsides, of course. That is true for many utility companies, is, as you can imagine, with having all the infrastructure underground and how much it costs to replace that or repair that if something breaks, it can get extensive cost-wise, which is why before you ever invest in any utility company, including this one, American Water Works, look at their debt levels, see what infrastructure improvements they have coming on, go to their company website, see what projects they have coming up, read their financials, read the notes in the financials to see what is coming down the pipeline before you invest in a company like this. Because debt is a big factor with utilities, because if they're, for whatever reason, if they take on too much debt, or if they at some point start to have trouble generating revenue, well, then their creditworthiness can suffer. And if their creditworthiness suffers, then their debt is going to cost them more and more money, which is not a good thing. So that's something you want to be mindful of before investing in any utility company, including this one. So check that out. Let's talk about performance. All right, if you've been holding AWK, since the start of this year, you're currently up about 17-18% year to date so far this year. If you've held it for more than a year, you're up about 26-27%. 2-year return is about 63%. And the last 5 years, you're up 183%. So over the past 5 years, if you compare that to SPY, which tracks the S&P 500, you're 3 times the amount of performance, the amount of return on your investment compared to the S&P 500. And we're talking about a utility company. You know why? You know why I think this investment is so successful? Is because it's water, ladies and gentlemen. Who can go without water? Nobody. That's why I think this is, in terms of long-term stability, the way the company is being managed so far has been very successful. The income, I think, is just going to keep rolling in, and I think this is why they're going to continue to increase their dividend far into the future. This investment, ladies and gentlemen, is one in which I plan to hold for life. I recommend you check it out, see if it's something you want to invest in. Do your research, of course, do your homework before you invest in anything that we're talking about today, but check out American Waterworks and also check out my more in-depth review in this other video, which I'll share below. I'll leave that link to where you can find my original review of this company. All right, ladies and gentlemen, well, this concludes part 2 of this 10-part series. You have 2 more investments to add to your investing tool belt. 2 more investments to really look into and research and see if they make sense in your portfolio. If you enjoyed today's content, it would mean a lot to me if you hit the like button, comment below, let me know what you think of these. Let me know what bond funds you enjoy or water utility companies you're invested in, and if any. I would always love hearing from you guys down in the comment section. And if you haven't already subscribed, it would mean a lot to me if you did, especially as we roll out the upcoming episodes of this series. Plus, by subscribing, it tells YouTube, hey, this channel has valuable content, or this is a video that should be promoted. So if you subscribe to the channel, if you're not already subscribed, it would mean a lot. So thank you so much for your support, everybody. I love hanging out with you on YouTube. I will see you down in those comments. Have a great week, everybody. Live life on Cage, and I'll see you in the next one as I keep rolling these things out as quickly as possible. Peace.